Hello and welcome. In this video, I want to see how well the stock market does within the trading strategy idea I've talked about within cryptos, and of course this is the purpose for such of crypto trading, and see how well they do when you, in this case, at the end of every week, buy and sell the stocks as they go up and down, making sure that each stock you own is pretty much worth around the same. And within spreadsheets, you can make them worth exactly the same. Of course, in real life, if say a stock's supposed to be worth say $10,000 and it's worth $9,915 or $10,017, close enough. But with spreadsheets, you can get the data pretty good. And I can see by holding the 30 stocks, buying them all almost 2 decades ago, 18 years ago, and just holding them for 18 years where they would be. But if you would buy and sell, then I can see how well that would work. I can put a function in for what percentage you're going to use as cash or the base. And I put a big letter B in because I think that's a good math algebra term for, in trading, base currency. It can be fiat currency, and even in cryptos it can be fiat currency. It can be Bitcoin. It could be Ethereum. And of course there could be other ones, but the base currency you're trading everything in. So in a situation here, you're going to have, say, a portfolio of 30 coins, tokens, stocks. And then you're going to have that worth X percent. If you have 20% cash, you'll have 80% stocks. 25% cash, 75% stocks. Now what that does is when the actual markets itself collectively all go up, that means your base would also go up, forcing you to sell stocks to cash or to base currency. When markets go down, that's going to force the base to also go lower, which will force you to buy stocks. So sometimes you can put 10% cash in, 20% cash. It'd be interesting to see how well it performs using a very aggressive level, the opposite of aggressive, which is a very small conservative level, and then numbers in between, 5%, 10%, 20%, 30%, and so on. So how I will be doing this is I've started my spreadsheet off already, and I have 2 of the 30 Dow codes, only 28 to go, yay, okay. 3M and American Express. This was a closing price on each of these dates. So I'm going back 18 years to May of 2000. So I will use investing.com to get my data. I'll now go to that. But before I do that, I need to know what the Dow components I'm going to play are, and this is Wikipedia. So I can see I got to get Apple next, AAPL, and then the rest of the list going down to Disney. So I got the list that I need. So now let's get the data for AAPL. And investing.com is where I'm going to go. I'm going to try to adjust the screen. And then I'll put AAPL in. And there's Apple right here. So that will bring it up. So what I want to do is I want to go to historical data. There we have it. And I'm going to want weekly time frame. Going to change the date in here, and all I'm going to do is change the 17 to 00. Push apply. And I want to sort the date in the opposite order. And I'm going to copy and paste all this data. It's copied. I'm going to open Notepad and paste the data into Notepad. Edit, select all, copy. Go to my spreadsheet. Paste her in here. Don't need the date. So we'll get rid of these columns. And this is the close, high, low, open. I only want the close. I don't need anything else. So delete these columns. Oh. And there we have Apple's price. Oh, what a difference that's going to do. I don't know. Should I count this one, though? That's going to really make this go way up. I mean, it's only going to be 1/30th of your portfolio, but look at the price difference. Falls to $1.94, up to 6, 10. Then you have the 2007, 2008 top. And I'm hoping they adjust to when they change the price half, or when they do a price cut, whatever they call that. I used to know that name like it was nothing. Split. I think it's a share split. Pretty sure. But of course now this thing has went up. I can always delete it later, but no, I'm going to keep it. I'm going to keep it. That's going to be interesting to see in that. Now, one reason why you see you don't is because it wasn't a Dow component back then. Well, so be it. So therefore, I'm not going to copy and paste all of them on tape. It's going to be something that's a tedious bit of work, but it's all worth it in the end because I get very, very good data along the way. It'll be cool. It'll be very cool when being able to buy these things and seeing a market that says AXP, BTC, American Express against Bitcoin, Apple against Bitcoin, 3M against Bitcoin. And just like you can trade like Litecoin against the dollar and Litecoin against Bitcoin, you can trade Apple against the dollar and Apple against Bitcoin. And really stocks should be on the blockchain. And I think eventually they will be. It would be good news, for me anyway, and so many other people, if that does become available in the near future. Okay, so the results for this probably later tonight, and I'll talk to you later. Bye-bye.